Good morning. Time now a few minutes after 8 o'clock in the morning in Tokyo, Friday, October 1st, 2021. Welcome to another edition of the World Bank Group morning seminar organized by the World Bank Tokyo office. My name is Koichi Omori. I am Senior External Affairs Officer of the World Bank based in Tokyo. We organize many online seminars introducing the latest report put together by the World Bank Group economists and specialists. Twice a year in spring and fall, 6 regional chief economist offices publish a half-yearly regional economic update. And we have established a good tradition in our morning seminar series to feature each one of them. As the kickoff of our tour of the 6 regions, today we are featuring East Asia and the Pacific. This is another good tradition that we start with our neighboring region. Connecting from Washington, we have Elgis Islamaj, senior economist from the Office of the Chief Economist for East Asia and the Pacific, and the lead author of the latest edition of the East Asia and the Pacific Regional Economic Update, which was released on September 27. Elgis, good morning or good evening to you. How are you?
Hi, Koichi. Thank you for inviting me. Happy to be here and present our update to the Tokyo office.
Great, thank you. Elgis becomes a regular speaker in our morning seminar series, and we hope to have some opportunity in the future to be able to host him in person to present the future edition of the update in front of our stakeholders in Tokyo. We will listen to Elgis for the next 40 minutes, presenting the main findings of the report. Following his presentation, I'll read your question. If you do not have opportunities to send your question in advance, please do so even during the seminar using online form posted on the announcement page for the seminar, or you can simply post your question on the chat section of the YouTube screen, and I'll read your question after keynote presentation by Elgis, asking him to respond. With that, I would like to ask Elgis to come in to start our presentation formally. Elgis, please.
Koichi, can you tell me which side are you seeing? Is this correct?
Now we're still watching the presenter's view on the screen.
Better now?
No, actually, still in the presenter's view. Yeah. Now we see the full screen. Yes. Great. Thank you.
Let's give it a second. Okay.
No, actually, this is still presenter's view.
No, it switched when you said that it's not working, and I tried to do it again. But it seems like it comes with a delay. Can you confirm when it's all right? Rishi, is it now the viewer's view? Can I go on? Is it okay?
Not really, not yet.
Maybe you should try duplicate the display. From display settings.
Problem working with 2 screens. Okay. Okay, hope everybody has a good view of the presentation. Thank you very much, Koichi and the Japan office for hosting us. It's really been a nice tradition. This is the first place we present after we launch our update, at least outside our World Bank presentation. And last time, when we when we wrote our update, we thought that, okay, this would be the last update we write about COVID. Of course, there'll be issues to talk about the scars of COVID, but we're hoping that COVID would be in the rearview mirror. As we all know, that is not the case, and the East Asia and Pacific region has been hit especially hard. We call it in our update a reversal of fortune. So we're going to talk about that. What does it mean? What do these recent developments mean for the near future? What are the immediate policy priorities? And then, again, thinking ahead of the long scars that this COVID has inflicted on our economies, what can be done to help these countries grow stronger and better? Now, if you go to our website, if you just Google EAP Economic Update, October 2021, you're going to see there that in addition to the main chapter where we summarize and discuss basically very succinctly the main points, we've also posted what we call a supporting analysis, which is like the longer chapter with a lot of analytical boxes that are basically backing up some of the claims that we made. In addition, if any of your viewers is interested, we are also posting the Excel charts for all the figures that we show in the update. So if you ever want to use them in any of your presentations, please feel free to do so. And if you use the same chart, we kindly ask that you cite the East Asia Pacific Economic Update. So just to walk you through what we're talking about today, and I'll try my best to keep it under 30 to 40 minutes, so then we have plenty of time for discussion. I'm going to briefly talk about what is happening, and then, as we've done in the past updates, we try to distinguish. This is an update, and it happens very often. And in some of these World Bank reports where this thing happening, it's very hard not to end up with a product that just talks about what is happening, a real update, and then it becomes one of what we call one of these up and downs documents. But we try hard to bring a story behind it. So we have thought hard and we have done a lot of analysis to explain why this is happening. And then what are the big risks going forward? And then what can be done in terms of policy, both in the short term and the long term. So first, what is happening? So we have discussed before, and what is a well-known fact, there is this multi-speed recovery that has been happening in the region. So the chart that you see on the screen is actually showing the level of output, but indexed at the pre-COVID, pre-pandemic levels. And that corresponds to the last quarter of 2019. As can be seen in the chart, China and Vietnam, they had already, so their output was already above the pre-pandemic levels, and they were growing strong. The other countries, reflecting scars from the pandemic, they were still growing. There's a recovery that we see there in those countries, but the recovery, so the convergence to the pre-pandemic level, was slower due to the scars that pandemic inflicted on those countries. But we also know that these infections due to Delta variant has been increasing across the region, and that is reflected in the high-frequency activity and indicators that we've been monitoring. And we've seen that the economic activity has been slowing down. Apologies for that, everybody. So what this meant for our analysis, it meant that we downgraded the forecast for 2021 compared to our April forecast. Now, China, the forecast is actually slightly above what we said in April, and that is due to a stronger export performance, not only from China, but for the whole region, and I'll touch briefly upon this in a few minutes. But when it came to the rest of the region, the growth forecast is about 2 percentage points lower than what we forecast, what we projected in April. And this is all due to the resurgence of cases due to the Delta variant, especially this summer. And here you see the country-specific performance, and you guys have the presentation. And the worst performing, of course, is Myanmar, where not only they had a military coup, but also they had like what we refer to as the third wave of infections of COVID. But also some of the Pacific Island, also they had to downgrade their forecasts because they realized that while they were hoping that tourism would be better, by the middle of this year, they realized that it's going to be maybe another 1 year or two before tourism starts back to where it was. What this meant for the region, it meant a decline in employment. And what we notice is that this decline in employment is actually due to a decline in labor force participation. So we saw a lot of people that have basically dropped out of the labor force. Now, part of this is also because people left their formal employment or lost the formal employment in urban areas, and they moved to more informal employment in the rural areas. But again, some of this drop in employment can be explained by a drop in labor force participation. And when it comes to poverty, this means that there are more poor people in the region that they would have been if there was no COVID. By the end of 2021, we estimate that in the region, excluding China, 24 million more people are poor, so they were unable to escape poverty due to COVID. So this is just a very short presentation of what happened, and I try to give some explanation of why we changed our forecast. And now we're going to try to bring in some more analysis and think through why this is happening. So I told you I refer to this reversal of fortune, but this reversal of fortune, I refer to the fact that because that in 2020, the region was actually quite successful. There were a couple of exceptions, say the Philippines and Indonesia, also in terms of the disease didn't do so well, but most countries were able to actually control the infections much better than the rest of the world. But then when it came in 2021, all the measures that they were using, especially the very effective testing, tracing, and isolation, it turned out not to be so effective against the Delta variant. And because of that, this region now started seeing more and more infections, which affected economic activity. So the size of the shock, in this case is still the pandemic, the government ability to basically contain the pandemic are factors that affect the economic outcomes. At the same time, their ability to take advantage from the rest of the world. This is actually where the East Asia and Pacific got lucky, and they did quite well. And the ability of the governments to support the economies are, in our view, factors that have affected the growth outcomes. So let's start with the first one. As I said, was the size of the shock. So the Delta variant hit the region pretty hard. Now, is it their fault? Well, yes and no. To some extent, the Delta variant was much more infectious than previous diseases, and what has been successful in the past, like testing, tracing, isolation, and social distances, were not as effective against the Delta variant. So the region, I guess, was unlucky, but not to blame. Then it's, but again, this reversal of fortunes, because what was good for them in 2020, again, it's still good, it's not bad, but that was part, so that worked a little bit against them in 2021. Now, two things. First, we try to understand and basically try to look carefully at the vaccinations. Now, our analysis, and this is in the update, I'm not presenting it here, but our analysis, some empirical work shows that the country's proclivity to vaccinate was lower when they were able to control the vaccines through other non-costly means, like it was testing, vaccinations, and then basically effective informational campaigns. So in countries like Vietnam, for example, which were doing very well in controlling the vaccination, we also saw, controlling the disease, we also saw that vaccinations were low. And, this was true in many other countries. So low vaccinations, combined with the fact that not many people, compared to the other regions, not many people in this region caught the virus. It means that they had low immunity to the virus when it came back in the form of the Delta variant, which meant that the population in this region was susceptible to this virus, and because it was susceptible to the virus, and they were a little late in the vaccination game, well, the government started to really sped up the vaccinations, and we saw that over the last few months, they did good progress in vaccinating their population, but they had no choice but to defend against the disease by increasing restrictions. And these restrictions, as we have discussed in the past, means that they will hurt growth. So controlling the virus now means hurting growth. Indeed, again, some other empirical work that we're doing shows that through this channel that we described, that I just described, that the vaccinations are correlated to growth. And we try to put a number into it, and we say that a vaccination rate, so an extra 10% of population vaccinated means that the quarterly GDP growth will be 0.5% higher. That comes from a cross-country variation. Of course, there are many caveats. It's just a preliminary estimate, but I think it's pretty sensible. Now, again, as I said, the vaccination, so the governments in the region started vaccinating quite fast, and a few of them you're going to see later that they are actually on track to doing well when it comes to vaccination, but it wasn't without its challenges. So basically, what we did in this update, we did a detailed survey with our country economists, our health unit country economists, and looked at the vaccination challenges in these countries. And in many countries, so what we focused on, we try to zoom in, is first is the delivery of vaccinations. So were the vaccines available to these countries? And, at least until midsummer and late summer, the bigger countries in the region, say Indonesia, Vietnam, Thailand, this is because their population is big, they were having some problems with the delivery capacity, because it was as much as they were able to purchase and they were able to contract, because think about it, especially when we go outside the main developed economies, then they have to contract these vaccinations, and they go into these procurement contracts, and then there'll be again some time before they are delivered to the countries. So there were some delays there, or some problems with the delivery, but at the same time, especially in some smaller island economies, there were problems with the distribution capacity, and this probably can be explained because, especially some countries in the region, there are problems like they are very fragmented, infrastructure is bad, so these countries are spread over many islands, very small islands, so getting there, it is not easy. Also, the health systems are bad in some places. For example, the PNG is one example, Timor-Leste, etc. Now, so this is when it came to the disease itself and to the government's ability to control the disease. When it came to taking advantage of the buoyant external environment, here's what the region actually had some good news. Because of the strong demand for electronics from the West, from the advanced economies, US, Europe, other countries, the region, especially China, Malaysia, and also other countries, in Vietnam, they were able to export a lot, and their exports grew quite a bit. They grew 20 to 30% more than before the pandemic. This was export of goods. The export of services, on the other hand, it continues to suffer, and the region basically has been not being able to benefit mainly because of tourism exports, and this affected especially countries like the Philippines and Thailand, and also many of the island economies. Now, there is again some not so good news ahead when it comes to basically taking advantage of the strong demand for goods trades. Is that because what we see in this chart is that this growth of exports has been plateauing lately, and this is due to several reasons. First, maybe the demand for goods in the West has been plateauing, like as they recover from the disease, a transition from goods, this transition back to services. Again, lately we see, a waning of commodity prices in some of the countries in the region that depend on commodity. But also, and this is very important, what we've seen with the resurgence of COVID cases from the Delta variant is some supply disruptions. And the supply disruptions has been in factories, and then through global value chains, they have gone up, to affect other goods that are being shipped and need to be exported. And at the same time, there's been there's been disruptions in the ports, especially a few ports in China that we've seen that they've closed due to COVID. And at the same time, the strong demand from advanced economies created greater supply and demand, and then basically the bottlenecks when it came to the supply. What we saw, and we did an analysis of this in one of the boxes that you can see on our website, is that, we all know by now that the cost of shipping have increased. We know that there have been shipping delays when it comes to timing of shipping goods, say from East Asia to say the US. But at the same time, whereas back in 2020, or in early 2021, for example, we were seeing that these shipping delays were mainly originating from North America, like this area here that it says North America was like almost half of this total of this pie, because it was basically the strong demand in the US, and the rest of the world could not keep up with the supply because there were disruptions in their countries due to COVID. Now, what we've seen is that the share of China, or the share of shipping delays originating from China, is much bigger than it was in the previous year, and you can see the comparison in the report. But here I'm showing just the final chart, and this is due because this port closure in China are actually affecting the shipping delays. And our analysis shows that the shipping delays are affecting the global industrial production, which means that they'll propagate, and basically drag the recovery of the world, which means that, the world will suffer a bit due to that. And as we heard, the Chairman Powell this week, they're also contributing to inflation, which again, we hope is going to be temporary. So government support now has been declining. Again, in this chart, we were careful. We did some detailed analysis of the sources of where the government is spending this extra support due to COVID. This is just the additional support due to COVID. And this includes spending in infrastructure, public works, support to households, and support to firms. And we see that, it isn't not what it used to be, even though the output gaps remain negative, which means that, they need this extra boost from the demand, from the government demand. What we have also seen, that I'm not showing here in the presentation, is that the fiscal space in these countries has gotten smaller, which means that there's been higher budget deficits, higher public debt, and therefore the governments are not in as good a position to support the economies as they were. They still are supporting it, and their economies do need the support. But looking ahead, this is something that we are seeing these constraints biting, and these governments have to bite the support needed towards the potential risk of instability in the future. When it comes to monetary policy, we see two things here. First, the monetary policy has been supportive. and we can say that in some countries there's still some room to prop up demand by losing monetary policy more. Now, this is important because we see that, I mean, not only that when COVID hit in early 2020, they lowered the interest rates and also basically unleashed other tools of both conventional and unconventional monetary policy, which I don't need to show here. But as of the latest data point that we could collect when we put this update ready for publication, none of the countries in the region had actually increased the interest rates or made monetary policy more restrictive, which has been the case in some other emerging markets in other regions. For example, in Turkey, in Brazil, in Russia, Mexico, right? And mainly it has been because there's been a fear of inflation. Now, we also did we paid due attention to inflation, and while inflation is not as well, first of all, we saw that after an initial spike, inflation fears kind of subsided in East Asia. They were mainly driven by the increase in some commodity prices, like fuel, for example, oil, but also food, and affecting countries like Philippines and Mongolia. But with the exception of these two countries, then inflation in the rest of the region remains within the central bank ranges. Now, these supply constraints and this increases in prices in imported goods and even commodities, they have increased producer prices, and this is something we show in the report. But we also, from what we can tell from our analysis, is that the inflation expectations throughout, at least in the major countries in the region, are well anchored. So the pass-through from, those producer price increases to the consumer price increases historically has been low, and we expect it to be low going forward. It doesn't mean that the risk isn't there, but it's likely to be low. Second, also, if there are further exchange rate depreciations, although until now the exchange rate depreciations have only been mild in the region, the pass-through again from exchange rate depreciation to the consumer price inflation is low, and we are hopeful that the inflation in the region will remain contained. So two further risks exist. I will just talk about them and then I'll move on to the policies. One is that if advanced economy central banks, like for example the Fed in the United States, starts increasing the interest rates because of fear of inflation, then we might see episodes like the taper tantrums of 2013, and then we might see capital flying out of the region, and then in an effort to, and also basically the depreciation pressures on the currencies of these countries, and in an effort to kind of stop the bleeding from there, some of these countries may feel obliged to increase their interest rates. So that is a risk. It hasn't happened so far. At least the Fed has worked hard to decouple the idea of decreasing their balance sheets from the act of increasing the interest rates. The good news is also that if there is an increase in the interest rates in the US, hopefully it is because the US is growing. It's not because it is just a monetary contraction. And then in that case, this good news will make it less likely for panic to reign in and for episodes like a taper tantrum to happen. And we're hoping that until these things happen, also if the region starts growing better and stronger, then that there'll be less fears that there'll be destabilizing effects of these events. The next risk is basically what can happen to the financial systems domestically due to all the risks that have been brewing inside due to this regulatory forbearance measures. Now, we know that a lot of countries acted boldly and they tried to make sure that their credit markets will continue functioning and panic will not reign in, and that was probably a good thing. but also they should pay attention and make sure that they are transparent about all the measures that they've been taken and what is the state of the balance sheets of many of these financial institutions. Because as we saw in China recently, for example, it's probably not exactly why it happened, but the mechanism will be the same. That once we see, that there is pressure on the balance sheet of some of these big indebted financial firms, then they can be a threat to the whole system. So hopefully I was able to give a quick overview of what has been going on and what we think the main risks are. I'll try now in the next 10 to 15 minutes to discuss about the main risks, about the policy challenges. So here we were thinking hard because we were trying to think about the long-term effects of COVID, but there's a lot of things happening in the short term. And although we have talked about this before, so some of this I'm going to skip, but we do want to talk about the immediate policy challenge, which is containing COVID. Now, as I said before, the countries in the region have actually accelerated their vaccination quite a bit over the last few months. They started a little late and they got hurt because of that. But now it seems like at the current vaccination rates, and when it comes to availability, a lot of countries will be able or should be able to reach a 60% population threshold, so the 60% of the population vaccinated by the end of this year, 2021. And this includes China, Mongolia, and star performance, but also Cambodia and Malaysia and Thailand. And then a few other countries, they should be able early in 2022. Again, they should be able to reach the 60% threshold that we think is important. I'm going to tell you in a bit why we think it's important. Again, now there are some estimates that the IMF put forward a few months ago, and I got them to update those estimates for us. And basically, in some of these countries, availability of vaccines could be a problem. But hopefully not. Hopefully they will be able to recover that. But given that the rates at which they're vaccinating, these countries should be able to reach something closer to herd immunity early in 2022. And some other countries like Indonesia and the Philippines, which are heavily populated and have had their problems both with the disease and with the vaccine procurement and distribution, they will still be able to get there by the second quarter, so at least by the first half of 2022. And then when it comes to a few other countries, especially some islands, they will probably have a harder time getting vaccinated, and it will be later than 2023. Now, why are we saying 60% threshold? Well, it is a little arbitrary because it can be 60, it can be 70, it can be 75. Even that might not be able to protect us against these variants. But we looked at the data quite carefully. We looked at the experience of the countries. We also tried to put some empirics behind it. But I think our point is best illustrated through these charts. So what we saw, for example, in these countries, and these are some advanced economies, but the same pattern can be seen if you look at other economies that have reached the 60% threshold, is that they were able to increase the vaccinations earlier in the year. And then when the Delta variant hit, then we saw an increase in cases. Now, as we know, vaccinations are not most of these COVID vaccines are not 100% effective against infections, but they are very effective against hospitalizations and fatalities and mortalities. And actually, what we saw in these countries is that when this new wave of infections hit, even though the infections were almost as high as they were before in previous waves, the fatality rate was much lower. Now, again, because infections are high, some people are still dying. So the number of people who are dying due to COVID, it's probably higher than it was during a time when there was not an infection wave, like for example over here, but it is much lower than it could have been given the size of the number of infections due to COVID. And this is due to vaccines. At the same time, what we noticed is that these countries that have this high vaccination rate, when they actually saw and felt that this reduced their death rates, also during these recent waves, they saw less declines in mobility, right? And mobility is directly related to economic activity. And even when we try to look at this high frequency indicators of economic activities like the PMI, manufacturing PMI and services PMI, then again, we saw that these countries were less affected than in previous waves. And actually, we have some analysis there where we say that the sensitivity of economic activity to infections has declined compared to what it was last year, for example. But again, vaccination is important. It's not everything. In some countries, there's still some vaccine hesitancy. We need to fight vaccine hesitancy. We need to improve distribution. We need to figure out ways to expand regional production. So there are no constraints to vaccination. And very important, we think, and we highlight it in this update, these countries should continue with testing, tracing, and isolation. In some countries in the region, say Thailand and the Philippines, we've seen a plateauing of testing. And what should happen is something like in Singapore, that testing has continued strongly. And even though vaccines are available and are being distributed in these countries, they should continue their testing. At the same time, they should continue their precautionary behavior, social distancing and masks in crowded spaces. And at the same time, they should think hard, be ahead of the curve, and equip their health systems so that they can fight COVID. There are some improvements here. We don't talk about it in the update, but it was part of the discussions that we had with our colleagues in the health unit, that across countries right now, we see that the health systems are better able to deal with these severe cases, in terms of how to deal with them, and they just learned about it. That's good. But also, they need to be better equipped to be prepared for this long COVID, because something like the Delta variant can come back again, and they can be in the same situation. Now, this was the immediate part. This is what's happening. Something that worried us from the very beginning when we started writing this update are what we refer to as the longer-term policy changes, like addressing the scars of this disease to support inclusive growth. So why we think this is especially important is because what we've seen happening over time is that there was a period where these countries were growing. And, we talk about quality, we talk about, better, good growth when it comes with less inequality. And we saw that inequality actually increased in the early parts of the 20th century, so in the 2000s. But this increase in inequality came with an increase in growth. So even though it wasn't good because inequality was increasing, in a way, cake was larger. So there was it was going faster. So there was more for everybody. That was probably able to smooth things a little bit. And here I'm picking on the two most populous countries, but it's a similar picture across the region. Then later on, especially after the financial crisis of 2008, 2009, we saw that in several of the region's economies, the government started addressing these inequalities issues, but also growth started declining, and this has been discussed in many other World Bank reports. I'm not going to go through the details here. But going forward, what we are risking is basically a slower growth, and this is something we've discussed in our update, unless some serious reforms are implemented. And because of what I'm going to tell you next, an increase in inequality. So now we have what we call in the update a double whammy, like a situation where inequality is increasing and growth will be lower, which is actually, in that case, the region has not seen a situation like that. So we saw that sales of firms have decreased, and as the sales have decreased, employment has also increased. The the micro and small firms have been hit hardest, and the larger firms, which is like better employment, has been shedding, more workers, and those workers are migrating, or at least some of them are able to go maybe in the informal sector, the micro small firms, where, they're not as good opportunities. This will lead to a loss of worker and firm relationship and a loss in human capital when it comes to, workers being able to improve productivity within the firm. So we see this as a potential for slower productivity going forward and lower growth. The same thing is when we look at what is happening with individuals, with households. The pandemic has increased food insecurity, and especially with the lower quartiles of the population. So Q1 refers to the poorest. And what that means is that there will be more stunting going forward, and more stunting affect human capital, affect productivity. At the same time, households during this pandemic have had to basically take on more debt or sell the assets that they could have, which means that going forward, they will basically, it will affect their ability to accumulate capital, especially in cases when these households are household-owned businesses. And it will affect growth and productivity going forward. And the same thing, there's been some problems with education and the loss of schooling. We estimate that could cause up to a 4 percentage point in lifetime income drop compared to a situation without the pandemic. So what can be done, and how can we help, basically that these scars are not affecting growth or are not leading to lower growth that will make everybody worse off? Well, some opportunities are indeed created by this pandemic. One is that there's been an acceleration of adoption of digital technologies. And this does not only mean, e-commerce, doesn't just mean that, more firms are able, or have been fast into selling, their products online, but also means more adoption and more investment in more, productivity enhancing technologies like supply chain management and other technologies that we highlight in the update. At the same time, while education has suffered, and that is something serious that needs to be addressed, this education opportunities, these online education opportunities have now, become part of the way, students can learn, and there's the potential to reach more students. And if used effectively, they can actually help increase human capital and productivity growth. So looking at the data that we have, there are problems of, so demand is a problem, capability, workers, working in firms, and need to be equipped to be successful in this area, and also, find access to finance for these firms is a problem. Infrastructure is also a problem. So while, internet, mobile, basic internet, and, internet in their homes has been very widespread lately, the fixed broadband speeds differ across countries and within countries as well. This is important because when it comes to this productivity enhancing technologies, like for example, connecting to a cloud, and this is one of the boxes that we feature in the update, it is basically the broadband speed that matters. You cannot do those things always from your phone. So infrastructure should also be improved, access to finance should be improved, and capability of workers should be improved. When it comes to education, again, this is a little more detailed that's ideally would be in the presentation, but this is also an opportunity that, all these loss in education should come back. So not only this country should focus on safe reopening of schooling and bringing the students safe to schools, but they also pay attention to improving the curricula, improving, the teachers, the ability of teachers to give, to provide lectures, and also improve in any way that they can the ability to reach out students, even if it is through online learning. The other thing that can help with is scarce is basically fiscal policy. And the problem here that we have highlighted also in the past and in other work is that the fiscal policy hasn't been very redistributive in the region. So this chart shows basically the correlation between market income Gini coefficient and disposable income Gini coefficient. So basically, how is inequality after taxes and transfers? And for all the countries that we focus on, we see they are along the 45-degree lines, which means that nothing has changed after their fiscal policies. But some good news come from an example from Indonesia. We see that from 2012 to 2017, they reduced energy subsidies, and they were able to allocate that money. So this was without increasing the deficits. They were able to allocate that money to more social assistance, higher infrastructure investment, and more spending on health. And what this meant is better opportunities for the poor. So basically, for the people in the bottom of the income distribution, and their incomes go faster, which basically means better equality. So bringing all this together and thinking that there are ways to improve and invest in human capital, there are ways to increase productivity through digitalization, there are ways to basically make investment more efficient and also increase labor force participation by including women in the workforce. We have done these estimates. Again, what this is showing is the potential growth, potential GDP growth in these countries, and the reforms, these policy improvements that we have thought could be realistic are based on these countries or their peers' past performance. So we're not saying that take Timor-Leste and make it like Canada. Basically, we're saying, think about Indonesia, think about countries that are similar to Indonesia. What has been their experience? How much they've been able to improve on these dimensions, in the past, and then thinking ahead that this is within their basically possibility sets. Then these policy improvements can help increase potential growth going forward, and by as much as 1 percentage point. It's like 1 percentage point every year. So I think I am a little later than I promised I would be, but we still have time for some question and answers, and I'm happy to stay as long as you guys need me to stay. Thank you very much, and thank you for your continued demand.
Thank you very much, Aegis, for your presentation, giving us the big picture, but yet very detailed explanation of the main point of the latest edition of East Asia and the Pacific, just issued earlier this week. Thank you very much. We received several questions from our viewers, so let me read those questions they're asking you, Aegis, to respond. First question we received from our viewers, question from Takashi-san. Thank you for your question. In some Pacific Island countries, major delays in vaccine rollout are observed, which may continue impacting to slow the pace of recoveries, leaving these small islands left behind. What are the major bottlenecks and the key priorities for them to overcome the situations? So this is the first question, Aegis. If you have any responses, please. Thank you.
Yeah, well, thanks for the question. It's actually a very good question. And as I said, we try to provide a snapshot in the update of what are the main constraints to vaccination. And what we noticed is that, and this is actually something sensible, that because of their small size, maybe the vaccine delivery, so getting the vaccines is not a problem. We saw in the case of Fiji that they were able to very fast increase the vaccination rates. Also, many countries have been generous, not as generous that we argued they should have been in the past update, but they have been generous. and this has benefited small countries. I mean, it's hard to basically ensure a large supply for a country like Indonesia, but it's easier to, to basically get it there for the small Pacific islands. The problem there is distribution. So they should focus or figure out ways to how to distribute the vaccine. And in some parts is also vaccine hesitancy. Right. So first, these are things that can be done through information campaigns, through transparent information about what this vaccine entails and what is going on, and making sure that there is like a clear debate to say that these vaccines are safe. There's not a problem, and then they should figure out country to country which is the best way to distribute their populations. And it is hard for some of these countries, especially some where the population is spread through different small islands. On the one hand, it's good because they are more isolated, and then, but eventually they should all get vaccinated.
Thank you for your responses. The other question from Sasaki-san. Thank you very much for your question, sending to us in advance. On the slide 24 about addressing the constraints to the diffusion of the technologies, it is interesting to see the lack of demand and uncertainty and lack of capabilities are much bigger constraints compared to lack of finance. While we tend to think of limited resources for necessary infrastructure for technologies is a major problem. How do you interpret this graph, and what do you think of the key priorities for the government in the regions to deal with this? Elvis, if you have any responses, please.
No, definitely access to finance is a problem there. And so one of the things that the World Bank has done very effectively and very innovatively since this crisis hit is basically leverage their programs and leverage their connections and their existing networks in the countries to basically conduct these surveys both for households and for firms. And these were done in real time during COVID. There's several waves of these surveys, and that's when some of the data comes from. So if you think about it, it's probably not that surprising because if they were asked during the pandemic, what is your biggest constraint? Maybe it wasn't access to finance. Actually, what is surprising is that access to finance is number 3 on that list, and it's still large, even though many governments have actually gone out of their way to make sure that there's free credit. There's a lot of credit available to this economy, to these firms. So it is definitely, a very important part of making sure that firms are able to continue their operations and investment and grow. It is a little bit, it's not inconsistent with what we know about, but because of the nature of the data and the nature of the times when this is happening, I think it's in line with the story. It's a good question and good observations. Actually, I hadn't thought about it until now.
Thank you for your responses, Elgis. We received a question from Professor Yoshino of Keio University during your presentation. I'll read. Due to limited physical space, many countries have to prioritize sectors to spend: infrastructure, education, digital commerce, etc. What kind of expenses do you think the priority? This is a question.
Thank you, Professor Yoshino. That's actually a very hard question, big question. So in the last update, we devoted quite some space to fiscal policy, and again, the $1 million or $1 billion question is exactly what Professor Yoshino asked. What we have tried to do is to basically provide a framework on how to think about fiscal policy in the past update, and also in this update, how to generally think about policy and also the interactions between fiscal policy, monetary policy, and financial sector policies. What we say in our work is that we want to distinguish between three phases. One is the phase of relief. So during this phase of relief, for example, when COVID hit, or when you have like a big surge in infections like Delta in a country that large portion of the population is susceptible to the disease, and they need to basically increase restrictions, which will affect production and consumption. People need help, especially people in sectors like tourism and hospitality and other sectors, and especially informal workers in these sectors. They need help. So the governments did go out of their way to help these people, and they probably that was the right call. They got a little bit lucky in some sense, because first, monetary policy by lowering interest rates created more fiscal space. Right, they were penalized less for borrowing, so they were able to borrow more. And second, also, cheap credit in the rest of the world ensured that their capital markets continue to function correctly. And what we feared would happen back in March and April 2020, where we would have seen like capital leaving the region, actually did not happen, and that was the good news. Monetary policy and financial sector policies and fiscal policy have continued to interact to create more space for each other. This is a good thing, but they can also interact in reverse. When things start going south, then they can basically make each other's work more difficult, so that we should be careful. Now, the second phase is the phase of recovery. Right? A lot of these countries, we think they are in the phase of recovery. And here we have discussed that in some cases, relief is still needed. Right? Relief is still needed, especially for these workers that are affected the most in these sectors. And here is a debate we don't touch a lot in this update, but it's basically in some countries we see monetary policy helping firms. Sorry, we see fiscal policy helping firms, and I think this is true in Indonesia. Whereas we're saying, okay, gradually, like in other countries, we should probably focus the fiscal policy help into households and leave firms to get their help through monetary policy, basically, rather than through direct infusion of money. And this is a step that we slowly are thinking about it, and probably it's safe to say that. Now, how much do you help sectors like tourism? So help the people. What happens there? We have to figure out a way to think what is their future and what they're going to do. Definitely, the health sector is a sector that needs more help. The industry has actually been good in most countries in the region. So if we think about helping sectors to increase production, probably there's no emerging need there. But again, when it comes to sectors or policies that maybe are not limited to one sector, but will help transition into a more digitalized economy, into a better equipped labor force, I think those would be good investment going forward. And again, this is some of the things that we discussed in the last update, that in the recovery phase, is this relief should continue into a more targeted way. And also, the government support should continue to provide demand, maybe through some public works or shovel-ready projects, because they are experiencing negative output gaps. And then going forward, they should think about investing in sectors or in other projects that will help sustainable growth.
Thank you very much. Connecting from Washington this morning with us, the Elgis Islamaj, senior economist in the Office of the Chief Economist for East Asia and the Pacific region. Thank you very much, Islamaj, for being with us, presenting the report. Really appreciate it. Thank you.
Thank you, Koichi. It was my pleasure, and thanks for all the thoughtful questions.
Thank you very much. Okay, next week we are featuring the new report titled Groundswell, the acting on internal climate migration. And this will start at 8 a.m. and on Friday, October the 8th in Japan Standard Time. With that, I would like to say once again, thank you very much for tuning in. Have a nice and wonderful weekend. Stay safe, stay healthy, and see you next week. Thank you.